Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Tuesday, the 10th of March. I'm Stephen Carroll in Brussels. Coming up today, the Iran war will end very soon. The US President Donald Trump seeks to cool market and political pressure as the conflict continues. Oil prices tumble as traders caution that Donald Trump's reassurance won't be enough to get tankers moving. Plus, inflated problems. Governments and central banks try to assess the impact of the ongoing war on their economies. Let's start with a roundup of our top stories. 11 days into the war with Iran, the US President Donald Trump says he now believes the conflict will end very soon. Speaking in Florida, he added that he does not expect hostilities to end this week, but that the US operation was ahead of schedule.
Very soon. Look, everything they have is gone, including their leadership. In fact, there are two levels of leadership, and even actually, as it turns out, more than that. But two levels of leadership are gone.
US officials have repeatedly insisted they can sustain the conflict indefinitely. However, Trump's remarks signalled a desire to show that American involvement will not be open-ended. At a separate event, the president acknowledged that there are still unanswered questions surrounding leadership in Tehran.
Think of it. We had leaders, and they're gone. Then we had new leaders, and they're gone. And now nobody has any idea who the people are that are going to be the head of the country.
The comments underscored the challenges ahead for Trump, who will need to reconcile his promises of total victory with the consequences of continuing the war. More than 1,300 Iranians have died in the war so far, according to an official toll that has not been updated for several days. Some 486 people have died in Israeli strikes in Lebanon, according to the country's health ministry. 6 people have died in the UAE, while several deaths have been reported in other Gulf countries. There have been 7 American casualties and at least 11 Israeli deaths reported. Oil prices plunged more than 10% after President Trump's suggestion that the war would end soon. In a further bid to steady markets, Trump said the US Navy would escort tankers through the Strait of Hormuz and that Washington would waive certain oil-related sanctions. His remarks followed comments from the EU Economy Commissioner Valdis Dombrovskis, who said the US had told its G7 partners that any sanctions relief for Russia would be temporary. Even with those steps, Eric van Nostrand, CIO at Lazard Asset Management, said crude remains significantly higher than pre-war levels.
Oil markets might feel good today because they eased off the highs we saw earlier in the U.S. trading session, but we're still in one of the bigger oil shocks of the past couple years.
Eric van Nostrand also cautioned that Trump's press conferences have not been a reliable guide to US policy in the past. The president did not provide further details on the tanker escort plan or the scope of sanctions relief, beyond saying that he had discussed the issue with Russian President Vladimir Putin in a phone call earlier on Monday. Well, meanwhile, Vladimir Putin has urged his country's oil and gas producers to take advantage of higher prices because the spike will be temporary. He told a meeting of energy executives they should use the additional export revenue to reduce their debts to Russian banks. It came as Putin and Donald Trump spoke for the first time this year. They discussed the war in Iran as well as Venezuela and the US-led peace talks between Russia and Ukraine. Here's Bloomberg reporter Michael Heath.
Russia, of course, is in a prime seat here because it remains sort of semi-allied to Iran, yet it's been courted by the US president. In a sense, Russia's sort of in this swing position of winning it whichever way it turns.
It's Bloomberg's Michael Heath. A planned round of peace talks with Ukraine last week was postponed due to the war in Iran, with neither side indicating when they will resume. Airlines are reviewing their growth plans as they consider how travel demand and fuel costs are being affected by the war. Bloomberg understands that plane makers and aircraft leasing firms are worried that some of their customers may push back deals for new jets. Sources have told us that some Gulf and Asian carriers have put discussions on plane purchases and leasing on hold as they assess the financial impact of the conflict. John Pearson, the CEO of international courier service DHL Express, has told Bloomberg his firm is prepared for any change in oil prices.
We have a very established fuel surcharge mechanism that aligns itself with oil prices. That goes up and down. It's been a recognized standard within the industry for 20 or if not 30 years. It's very transparently communicated on our website to our customers. Our customers are very familiar with it. So we ride these sort of waves of oil prices every day.
DHL Express's John Pearson there speaking earlier this morning. Jefferies says Boeing is especially exposed to the Middle East. Almost half of the orders for its upcoming 777X jet and a third of the 787 Dreamliner purchases from carriers in the region. The Bank of England is facing the prospect of UK inflation rebounding rapidly due to higher oil prices. A range of economists see CPI jumping to between 3 and 5% depending on where oil settles. Bloomberg's James Wilcock has more.
$66 a barrel. That was the spot oil price back in February. The Bank of England last met then, and they thought it would broadly stay that way. But the volatility of the past week has called that into question. Bloomberg Economics estimate if prices linger around $100 a barrel and end the year at 80, that would push inflation up nearly 1 whole percentage point. That in turn would have a major effect on both gilts and UK mortgages and would likely put the government in economic hot water. In the meantime, many assume the bank will be cautious about any further rate cuts when it meets next week, given how burned they were from the previous energy price surge. In London, James Wilcock, Bloomberg Radio.
Russia's invasion of Ukraine added to the problems for the commercial real estate market. Investors are facing up to another headwind for the sector. Bloomberg's Ewan Potts has more.
It's an industry with valuations that are hypersensitive to interest rates. So the war in the Middle East, which has spiked energy prices and therefore rate increase expectations, is a serious headwind for commercial real estate. It's a tricky backdrop for the industry as key players gather in Cannes for the MIPIM Property Conference. The year started with signs of optimism that bigger deals might be back on the horizon after a sustained hiatus. But 2 months into 2026, and it seems the industry has another new problem to deal with. In London, I'm Ewan Potts, Bloomberg Radio.
And those are your top stories on the markets. Oil prices lower this morning, 6.4% for Brent crude, $92.42 a barrel at the moment. WTI is down below $89 a barrel as well. The MSCI Asia Pacific Index up by 3% this morning after yesterday's sell-off. Eurostoxx 50 futures are 1.3% higher. The Bloomberg Dollar Spot Index is 0.1% weaker. And I'll just mention the earnings out of Saudi Aramco this morning, announcing a $3 billion share buyback program and raising its dividend. Investors, of course, focused on how the company weathers the impact of the war in the Middle East. It's been rushing to reroute some exports as the Strait of Hormuz remains at a standstill as well. It's been paring back output too because of fuller storage tanks and shut the biggest refinery in Saudi Arabia following a drone attack as well. So those earnings of interest from Saudi Aramco this morning. In a moment, we'll bring you more on why Donald Trump's comments on the Iran war are giving markets pause for thought. Plus, do we still need to be worried about the conflict driving up inflation around the world? But first, another story that caught our eye this morning. Reflecting on a wild day in markets, Bloomberg Opinion's John Authors has been writing about the remarkable moves that we saw in oil prices yesterday, surging to almost $120 before swinging back below $100 by the end of the day. And despite the volley of headlines, John writes that it's impossible to explain all of the moves just with what the developments of recent days. Sentiment, he says, plays a big part too. And some traders, he writes, were evidently willing to panic. But it's equally true that they weren't comfortable leaving oil above the landmark of $100. So he concludes that enough cool heads are prevailing, at least for now. Of course, the longer that the Strait of Hormuz is closed, the more challenging that might be as well. And if you wanted a lighter take on some of this too, John's pieces, as usual, come with a playlist. And he actually points out there are relatively few songs about oil that you can find. He has picked out a few, though. You'll find that piece at Bloomberg Opinion, and we'll put a link to it in our podcast show notes as well. Well, let's bring you up to date then with events in the Middle East. Markets appear to have been calmed by the US President's latest comments on the Iran war. Our Middle East managing editor, Paul Wallace, joins us now for more. So, Paul, we have seen oil prices come down after Donald Trump said that he believes the war will end very soon. Does that look likely?
Hi, Stephen. In some ways it depends on what Trump wants. I mean, yeah, he could end it very soon if he decided that the U.S. had done enough to achieve its goals and presumably that it had done enough for him to be able to sell a victory to the American public. I think that latter point is extremely important for him, given all the sort of chaos that this war has caused in the Middle East and in global financial markets. So, yeah, if he decides that, he's not going to go for regime change anymore, that He will stick to pure military aims, such as severely degrading Iran's ballistic missile and drone capability and naval capability, then yes, he could end it very soon, or at least take it to the next phase, which would presumably be much less intense and would see some kind of reopening of the Strait of Hormuz and Gulf Arab states being targeted less by Iran. So yes, that is possible, but it depends so much on what Trump himself is thinking and what he's willing to see as victory and how much pain he's willing to accept himself for the U.S. economy in terms of higher energy prices and all that.
And of course, at the same time, Israel has been part of these strikes too on Iran, and also, as we've been reporting, on Hezbollah-linked targets in Lebanon as well. If Donald Trump were to decide that he wanted to end the war, would Israel be willing to stop attacking Iran as well?
See, that's a big question. And there's certainly some strong thinking, and this ties in with plenty of public comments from ex-Israeli officials and all that they don't, and the government even itself is sort of implying this, it doesn't want this war to end yet. It wants to degrade Iran further. I think it is important to note, though, that even Israel is sort of softening its tone on regime change. It was more hinting at regime change even more firmly than the Americans were when this war started on February 28th, but it's pulling back a bit. So that might be a sign that Israel itself no longer thinks that regime change is possible. And if that's the case, then maybe it would just have no choice but to accept Trump saying, okay, we're done, we're stopping strikes on Iran now. It's quite difficult to see a situation where the US stops and says war's over and Israel keeps bombing Iran on a frequent basis. I'm sure Israel will say it retains the right to do that at any time if it sees a threat. But, I don't think it's difficult to see it carrying on as it has been doing in the last 10 days.
Okay, Paul, thank you very much. Paul Wallace there, our Middle East Managing Editor. Stay with us. More from Bloomberg Daybreak Europe coming up after this. Well, while markets are breathing a sigh of relief, at least for now, over the prospects of the war could end, our central banks off the hook. We saw yesterday how a huge surge in oil prices led to a repricing of government debt and rate move expectations. We have Bloomberg Opinion columnist Daniel Moss with us now for more. Daniel, when we're looking at things this morning versus yesterday morning, the markets look to be in a different place, but are the inflation risks from the Iran war very different, or do we just need to be prepared for more price spikes?
Expectations on this are changing in some instances by the day. So you're asking me, do things look very different for central banks than they did yesterday? Sure, but yesterday they looked very different from last Wednesday when there was a major meltdown on Asian indexes. What policymakers would really love to be able to do is to look through this and see what of higher energy prices has embedded itself in underlying trends of the economy. It is way too soon to say that. On the other hand, to make that bet, they need to be confident hostilities are going to end soon. Donald Trump has given mixed messages on this just in the last 24 hours. What's it going to be like in the next 72?
Which central banks need to be most worried about this? Is it a much bigger problem in, for example, South Korea than in the UK for the Bank of England?
Economies are coming to this space right now where we are, because this is a movable feast at 2:15 p.m. in Singapore on Tuesday. They're coming at it from different places. You mentioned Korea. Korea was doing pretty well. Its economy was reasonably strong. They've got an unemployment problem, but the tech sector was doing very, very well on the back of demands for anything AI related. And policymakers there had indicated that their cuts were over, and they see, thanks to their own dot plot, interest rates being unchanged for the next 6 months or so. Now, one thing we can say with a degree of confidence is that anyone in Asia who was thinking about an imminent cut in rates has to think again. If we get another couple of weeks of conflict, then there'll be a recalibration. Look, talking hawkishly, saying you're ready to take whatever measures are needed, you're hoping you don't have to act on that. Talking hawkish is easy. Actually following through is a lot harder when some of your economies are in a pretty soft spot.
Are there, when it comes to looking through the price moves, are there lessons to be learned from previous Middle East crises about what the lasting effects look like?
It's very difficult. Let me draw on another analogy for you. The world economy has absorbed a lot of blows in the past 12 months and is still standing. It's almost a year ago since the Liberation Day moment in the Rose Garden when widespread tariffs were imposed by the administration. You think of everything, the drama that transpired in the weeks following that. Oh, there's going to be a deep downturn. It's sell America. American assets will never be the same. Well, none of those things has transpired.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.